very, very different and novel approach to look at equity investment. Uh, if you look at, we are witnessing very newer types of risk globally. So if you look at the global risk report by World Economic Forum, it highlights that, the major risk over the longer run are related to climate change. So there will be more natural disasters, there will be more extreme weather events, and that's because the global warming taking place. So overall, we will see the effects of that, or as we become warmer and warmer as a globe, which will have its repercussion not only on climatic changes, natural disasters, loss of agriculture output. So there will be many things that we may witness, and the corporate sector may not be ready for such kind of risks. So overall, you need to ensure that, when these risks exist, the companies you're investing are looking at these kind of risks. At the same time, these risks also bring along with good opportunities, and whether the companies are capitalizing on those opportunities as well or not. So I think going forward, it's going to be incrementally becoming more and more important to look at these areas. And this is not us telling, but we can see these risks on heads of global investors. The World Economic Forum is suggesting every year that these are becoming more and more important risks. So if you look at on the right-hand side, long-term risk, you will not find any risk which is the economic or financial risk. It's more related to non-financial risk like environment, cybersecurity, cybercrime. Those kind of risks are becoming more and more important along with the societal risks. So even in India, if you see, of course, we have certain issues of our own, like digital inequality, cost of living crisis, because we have seen a K-shaped recovery post-COVID, which is not where rural India is not improving as much as urban India. So those kind of risks remain, but natural disasters and extreme weather events are becoming more important. The cyclones, for example, we never used to see such cyclonic activity impact India so much, but now more than often we are seeing those kind of headlines that are impacting Indian economy or Indian markets as well. 1998 or 2017 itself had a loss, given we didn't witness so many big disasters. Still, we had $80 billion of loss that we had to occur. Even if you see the 10 most costliest disasters, 2 of them have been in India, and incrementally more as climatic changes take place, we may see more and more such bigger disasters. So it leads to physical risk and transition risk for your companies that we are investing with. And if you're not giving enough attention, we could face a very wrong investment at our hands because of the losses that the company may see because of climatic change. India remains very, very vulnerable. The direct loss estimate that India could have is 2% of India's GDP. So if our potential growth rate is 6.5%, the climatic disasters like earthquake, floods, droughts, cyclones could shave off 2% from 6.5%. So your growth may go down from 6.5% to 4%, 4.5% if you're not looking at these risks. And especially Northeast is at a much higher level of risk as compared to rest of India. But sooner or later, it will have its own impact towards many other states in Indian markets. Even if you look at the risk profile of ESG in India, India is more than neutral risk. So if you look at it's more towards more risk as compared to towards less risk. And you put it from a map of emerging market countries, India looks more riskier than many of these economies. So wherever a foreign investor is looking, and given that they pay more attention to ESG when it comes to their investing, they will look at India and they will say that, India looks more riskier. So our investment should cater to ESG risk, or look at ESG risk in more detail, and therefore invest in that manner. So more and more, even investments would get channelized to companies that are looking at these ESG risks and adapting or mitigating those risks to a large extent. And therefore, it will make sense for investors to play that beforehand and position themselves beforehand before such capital comes into Indian markets and chases these good ESG companies. So it's an opportunity for investors to kind of position themselves beforehand and also ensure that they have a good journey investing in companies that are prepared for such risk and will capitalize on those opportunities whenever they come, because other competitors will only try and get their act in order or will want to comply with regulations at that point in time, leaving more business to companies which are prepared beforehand. Also, if you look at India overall, don't stay in denial. Don't just look at economic growth and profits, because this is happening for real. The climate change is happening for real, and it will have a more far-reaching impact on your investments, because we are all in the same boat. The society and the environment, as well as profits, are in the same boat. If we don't take care of society and environment, the profits will drown along with it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.